What's going on, everybody? Chris here. We're going to take a look at the Covey portfolio performance. We are currently first place. So we're really close to the monthly close. So these next few moments are going to really be important. So as far as like the performance, we can look at the portfolio. 95% total gain, almost 60% monthly gain. So that's like God tier status. 3% total gain today. I do expect us to rally a short amount in the next couple of days, but that shouldn't hurt us in terms of performance, in terms of the monthly close. Here are our positions. So the positions are UVXY, 2x short bear oil, 2x, 3x short real estate, SP500, 2x short real estate, and then short crypto. And these are the coins. And then our competitors, Mark is the highest level threat among all of them. A boom is he's got SPXS like 78%. Mark, he's hasn't really changed his positions, but he's got 51% monthly gain, 229% total gain. His overall history and just how he's grown his portfolio is pretty spectacular. He's I think USDU is like long the dollar. I'm not 100% sure on that. Bullish the dollar. So he's bullish the dollar. 2x short real estate. He's doing the UVXY, same as me. Short Carvana, short Tesla, and short some crypto. Some coins I never heard of, and this boom guy is like 78% SPXS, 79. So that's pretty much it for just the summary of the Covey portfolio performance. As far as like the Ninja portfolio performance on the summary, pretty much was short. I lost on the day, so I think it's roughly 4% per account. So 7,500 times 0.04. So roughly 350, 300. So 4% loss on the day. More double than what I would like on a loss on the day through all the chop. So interesting things that happened. Oh, we got an alert. Let's see what that is. Whatever that alert is, like I want to know. there's no sign. Where is it at? Going crazy. Okay, I don't see anything. All right, moving on. So, wanted to talk about the Ninja portfolio performance today. So, this is the New York Open, the red dots here, and I saw this breakout, and I was looking for an entrance in, and right around here, around the New York London close, I started to turn on the bot for reversion, and it tricked me. I got in long because I have two Ninja windows open. I have this one, and I'm trying to get in. And there's a trend mode and a reversion mode, and I have to flip them back and forth depending on the bias of the candle. So to remedy that, I'm just going to do one instead of two windows that I have to control, and then so then it makes it easier. I'm not going to get tricked on that. And then I'll just do, for the second one, I'll just do a manual entry after the bot gets in. And I saw this squeeze, and I was trying to get in here, and that was a bad move. I should have waited just for this one. And oh, jeez. So there it is, buy the dip. Okay. So it's telling us to buy the dip. We're going to put that on pause really quick. Pause, delete alert. There we go. It's the same thing. So in terms of like the, if we were to look at the same data, so here's this New York Open, and this is the London close, these green dots, and it looks like I could have got in here on this wick low, but it would have been stopped out. So reclaim or a retest of around here. Maybe this swing low, this would have been a really good entry on, I guess, a reclaim of this moving average channel. So next time, I'm gonna kind of keep an eye out for that squeeze. This is where it squeezed really big, right here, right here. And I totally didn't get that squeeze. I was just focused on getting in, and I need to pay attention more. So I set an alert for when that squeeze starts to just turn off the bot, and then wait until it turns off, and then get in. And that's this pump here, and then a reversion entry here would have been really good, and then the rest would have been history. Would have been a really clean trade. When I look at the bow span, so like I was trying to filter out chop with these two bands. So the idea is we want both of them to be hitting the downside, and currently they are. They're both hitting the down. Oh, this one's on the upside, but this was a really clean signal, and I woke up too late to get it. I mean, in terms of on the small time frame here, this entry is not too far from getting in up here. I mean, the signal would have been going into this New York Open. I mean, let's turn on the Oasis Trading Suite here if it gave us like a good signal. Looks like we need to get rid of an indicator. We can get rid of that. So this here did give us some good signals on the 5 minute right here. And I'm going to be more inclined to take these short signals on the 5 minute. Like here, it told us to get short here. The problem is I might have to do a manual entry if getting in after the signal doesn't trigger the bot. I don't know. We'll kind of have to play it by ear, but most likely I'm going to have to wait for a signal in the 1 hour and then check the 3 minute and the 5 minute if we get a signal. But in terms of the New York Open, that was a really good entry to the downside on the close of this 5 minute candle because we never really came back to retest that. And when I saw the 5 minute breaker and the hourly breaker, I was like, oh, maybe after this candle, we're going to come back and retest it, and we did. So that's like another thing that I need to look out for because there's a lot of chop here, and the idea is not to FOMO on the way down, but catch that retest and resumption off of like a 1 hour breaker to the downside and also possibly the 5 minute. But when it came to this, after the New York, and we never really came to retest that breaker, but I think we are going to come tomorrow. But to really get more in sync with just the operation we have here for entries. So that's kind of just the overall just gist of the day. It was that just working out some kinks and smoothing some processes. We got 4% loss on the day. Goal was 1.5%. So we got a little greedy on over trading into like noon, and that's something against the rules that I wanted to do on the trade plan is just not surpassing 1.5% loss on the day, and then trading outside of the high probability trend days. High probability trend days are Tuesday, Wednesday, Thursday, and trading outside the high probability trend times, we traded till noon, so we broke technically 3 of the rules here, and then but we kept the 1% per trade rule, and we kept the 2-to-1 rule, so it minimized how much we lost. But there's only so much you can minimize without keeping the other rules, right? So that was pretty much the summary, and because I was having to flip between 2 windows, it made doing this a lot harder too. So it was a little bit of a barrier. So that is the Ninja Portfolio Performance Summary of just things I want to experiment and things I want to change. So that's kind of what I added down here. Researcher experiments. How do I become more picky about entries? So I set alerts. So which conditions to narrow results. Retest the H1 breaker. It didn't retest the 5 minute breaker, so we had to get rid of that. And then setting alerts For squeeze, 5-minute auto squeeze. That's not auto. Squeeze. And then, what's the other one? 5-minute auto squeeze. And then another one would be just waking up, setting alert, setting an alarm to wake up on time. Like 7 a.m. because I woke up at 8:30 with coffee and being alert. And maybe also turning on Netflix while the market's going. Because I've found out that in terms of like choppy days, it just makes you on edge. It just gets really hard to wait. You get antsy. And I think if I have Netflix going on in the background, for the most part, I'm able to chill out a lot better. And then adding conditions on the divergence of the H1 and 5-minute bounce bands, divergence of connection. So by decreasing the risk. So I think maybe just keeping to the 1.5% risk on the day. I think I don't know. I actually think that's okay if that divergence is there, as long as the 1.5 risk on the day rule is held. So that's something that I need to hold to better. But yeah, I think waiting until the auto squeeze on the 5-minute is done, then catching maybe a swing low once the break happens, a nice swing low. Maybe I can get some kind of market structure break thing on the 3-minute to really encapsulate. Maybe there's a breaker that happens around there. So looking at the area of market structure break or the swing low that broke, I don't know. I think we would just kind of have to play it by ear. Maybe take the hourly. Oop, go back. Maybe I'll do the take this out, and instead of doing it on this, I just take an hourly market structure break, and then I just translate it across, sync it across all those time frames. Because I think if I did that, I would be in like a better position. So that put us here, and then maybe putting a resistance on each 3-minute upward up candle close. So then I have a better idea of just what's resistance, what's holding, and then catch that swing low. Once we reclaim the swing low, put a signal there and then there. I think that's kind of just the best way going forward, is putting resistance levels, seeing what's holding, what's not. We could tell it took a couple 3-minute bars to see like, oh, this is holding here, and then a reclaim of this moving average channel. And we knew we were in a breaker, and that's kind of what this that we filled it in with. And I think that's kind of what would help me set at ease, is these 1-inch breakers, putting it to where I'm like, okay, we're in a breaker. This is resistance if we come back into it, and we want to see a rejection off of resistance on the close, 3-minute close, and then a reclaim of the swing low, boom, and then reclaim a retest of the moving average channel high, and that's when we get in. And obviously it sounds more perfect post review, but I think that's going to help us really get in better on the research and the experiment, and just really applying that. So that's that on the daily. So now daily closing thoughts. We're going to go into SP500. So SP500, we had that down close on the day last week on Friday, outside bar. Today, Monday. This is Friday, this is Monday. So we had an outside bar. We're below the weekly open and the 72 moving average. My expectation is we're going to pump into that because institutions are long. and possibility for rejection and resistance. If we go here to see the H4 breakers, the SP500, we have an H4 breaker. And if we were to just kind of copy, are we tracking? Copy and paste this breaker to here. It's pretty much this zone. This is the zone that we expect to be defended. If it's not defended, we're definitely going to go and test this fair value gap. Do we fill it or do we reject off the bottom of it? The first test is to see if we destroy the breaker. And I believe that the 72 and the weekly open will be defended for a nice rising wedge to break down quickly to the downside and to test the weekly support. So that's my belief. We'll see how this institutional thing swings. If it swings pretty quickly, I'll keep you guys updated. But I think that's kind of just the overall bias for the SP500 that I have. We have the daily fair value gap, and then we have this H4 breaker. One of them price is going to react after from one of them, and we just don't know which one it will react off of. You know, it's kind of day by day kind of deal. So that's the S&P 500, and then oil. Let's take a look at oil. So oil, we reclaimed whatever this blue line is. I don't know what that is from. It looks like it's daily support. we closed below it, and then we reclaimed it. And we're kind of in this no man's land between daily resistance, the flip from the flip. It flipped support and it flipped back to resistance. And we're in this kind of choppy area. And it's either going to go lower or higher. And my expectation is it's going to go lower. If we close above this daily resistance you put here, then I'm going to get out of my oil bear 2x short. That's it. When we go to the credit spreads, so credit spreads was HYGH. We closed the day below. Here we are. Closed the day below support. We closed the day below yesterday's low or close. So, but we're still into daily demand and support right there. But we're getting really close to getting below those moving averages. So we did close the week below weekly support. So I expect this to be kind of like a breakout, and we'll see kind of how close we get to that weekly support. If we end up closing the week below this moving average channel, we'll be below all moving averages here, and a night pretty much no. If we were to hit that moving average channel, we would close below daily support and like a nice gap to the downside of just free fall that we could tap into. And also this weekly support would be a nice gap for free fall as well. And so that's closely coming. Like we're heading into that sooner than later. More movement actually happened on LQDH than HYGH. We actually had a flip of today of support to resistance. And we tested the next support zone line and it held. So, but we're under the 24 moving average. So our expectation is that it would continue to test this until there's a reclaim or just a breakdown. And and this is the first test on the weekly support. So it's either going to hold, or it's going to break down this week. If it breaks down this week, then we could expect the SP500 to break the same week. Most likely. So we're going to be closely watching everything from the credit spreads to just the levels that are breaking. So now currencies, we'll take a look at the currencies. So we look at, they're a little bit disconnected right now on the correlation. The euro is up. Japanese yen is trying to reclaim the upside. It looks like we're holding this low, but we're also attacking it right now. So we're kind of playing it by ear and looking at more on a weekly closing basis. But for the most part, the yen is trying to power up. The euro is trying to hold up, but it's got to go retest the weekly support that it made, that it broke on the resistance. So the support here, it's got to go back and retest it, and that involves getting under the yearly open and the weekly open, and that's some danger right there. Getting back below is like a sign of weakness. You kind of don't, you want to wick below and then wick back up, but I don't know. It looks really scary to want to go back below in terms of the euro and then the yen powering up. U.S. dollar, I don't know what's going to happen to the dollar. I'm not going to even look at it. It just looks too complicated. And the VIX. VIX looks like we're kind of in this no man's land. So swing failure pattern to the upside, swing failure pattern to the downside. So now it's coiling in this no man's land on the daily closes, and we need this daily close to hold here at 22.41, and we need this daily resistance to break, and we need to close above 22.84. So until we start making higher closes here on the day, it's just going to go sideways. It's just going to coil around this weekly open, and that's all that's going to be there. But we're expecting within the week or next 2 weeks that maybe we see a direction. So that's pretty much it for the daily overview. Videos to come: the Charles Schwab thematic portfolio, robot revolution, 25 stocks. We'll break it down to 10, and then tomorrow's trade plan.